Hey guys, this is Kevin here with the team. I had this question asked from me today. Two of my friends that are also real estate investor asked this question, and I figured maybe run it by you guys. Is this the time to buy? Is this the time to sell? Or should I hold on? This is one of those questions that is actually both sides of a sword are here to deal with this issue. Most people that are investors would have a complete different answer for the same question that these two friends asked me. They're not really professional investors. One of them wants to sell their home and just want to know if this is a good time to buy, or should they, sell immediately and buy something, and they're moving out of state, which the answer is completely different. And then I had another friend that just wanted to buy another property and thought maybe you should wait for the market to crash. And I had to really sit down and think about it, because as an investor, I look at this in a little bit of a different light than you would as a normal person that's sitting at home thinking, I have some money. Is this a good time for me to invest in anything? Is it a good time for me to invest in real estate? Is this a good time for me to invest in the stock market? Should I buy gold? Should I buy silver? Should it be cryptocurrency? What should I do? Investors look at it different. I want to talk about investors first before anybody else, because I think anytime, regardless of what the condition of the market is, any investor, whether it's a stock market investor, real estate investor, or any other investor that actually goes after unique, precious commodities and assets, they will buy. Why? Because somewhere in the world, there is a need for a particular asset that at that particular time and moment where you are, this may not be the case. I want to give you an example of that. Last Super Bowl, Kansas City Chiefs and Buccaneers had a game. I love that game because Brady is one of my favorite quarterbacks, and I used to be a huge fan. Still, I'm a fan of the Patriots, and when Brady left Patriots, it was heartbreaking for a majority of the people that were part of the nuclear Patriot crowd. I was one of them. I was really bummed. And of course, if Patriots are not in Super Bowl, I would want to go for Brady if Brady goes to Super Bowl. Well, he goes to Super Bowl against who? Kansas City Chiefs, and we don't have to say who the quarterback was. Mahomes. Patrick Mahomes was the phenom quarterback that was breaking all records. All records. He was kicking everybody's butt. He really is an impressive quarterback any way you look at it, a one of a kind. Brady is a pocket quarterback that throws the passes, doesn't run around. Mahomes runs around all over the place. They did a game, and something happened that I didn't think was going to happen. It was an absolute ass whooping. It wasn't even close. The Buccaneers studied Kansas City Chiefs and just destroyed them. Super Bowl 55 score was 31-9. Lopsided, the most lopsided. I don't think Kansas City Chiefs even scored a touchdown. It was really, at the end, really sad. They were dejected. The players were just absolutely frustrated, and you could see it in their body language. Now, before this game started, there were made two T-shirts because they didn't know who the champion was, right? They're not going to, print and actually design and manufacture hundreds of thousands of T-shirts for after the results. So they do it beforehand. What they do is they come up with hundreds of thousands of T-shirts that they think they're going to sell. And one of the T-shirts says, congratulations, Super Bowl 55 champion, Kansas City Chiefs. The other half, congratulations, Super Bowl champions, the Buccaneers. Once the game is over and we know the result, we know they can only sell one T-shirt. The asset that everyone in North America wants is going to come on there. ESPN is going to advertise, and they're going to buy it. What happens to the hundreds of thousands of T-shirts, or however many T-shirts, that was printed with Kansas City Chiefs? Where do they go? Do they burn them? What happens, right? This is just a T-shirt. It has no value. Where does this go? Who wears these T-shirts? Well, I can tell you this right now. Somewhere in India, in Pakistan, in some third world country, there are thousands of people that are wearing Kansas City Chiefs T-shirts as a champion, as a Super Bowl champion. That actually gives you an answer. Someone is going to buy an asset depending on how important that asset is to them. I couldn't really tell you at what point the stock market is going to crash or the real estate values are going to decline drastically. I can't tell you that. And if anyone tells you, they can actually tell you without a doubt at what time this is going to happen, they're selling you something. They're dishonest at best. Jerome Powell came out just a short while ago when we had the crash and he said, it's inevitable. We have to raise interest rates. And he went completely hawkish at the time that I didn't expect him to do it. My question was why? He came out right before, like a few weeks ago, before the fourth quarter earnings are coming out, before we really know, and he says, we're going to raise the rate. How many times? 3 times. 3 times. And he said, we're going to start this in March. The reason why we're doing it, well, anybody, and all my friends are mostly really smart investors and business owners, is because we have dumped trillions of dollars worth of money into a system. And at some point, you have to pay the payments, right? We print money. Who's going to pay it back? Well, here's the problem with this issue. You got trillions of dollars worth of money. Dollar is all over the place. They're everywhere. The value of dollar is declining, and our government is terrified. We cannot have dollar's value decline any more than it has comparing to other assets. They have to prop up dollar at any cost. And I want to make sure we're clear about this. At any cost. They want to raise the rate to save dollar. They have to. They have no choice. They've backed themselves in a corner. And all of my friends know this thing. Now, they say things like inflation is transitory. Transitory means it's in transition. As soon as you go, it's over. But it doesn't. Nothing is transitory. Nothing that quickly comes in and goes out. They know it. Powell is a very smart man. Completely the opposite of Yellen. Janet Yellen is not that bright. I'm not sure why she was at the position that it was. Now, I have to be honest with you. Powell is not quite as brilliant as Greenspan. Greenspan was absolutely a different animal. I read a lot of Greenspan's work. One of the smartest men that I've ever known. Just completely read the market really well. Was always a step ahead, except towards the end of his career, he had a couple of bad calls that I don't want to go through. Everybody talks about how this is going to affect real estate. Assuming they raise the interest rates, what's going to happen? Well, market values are going to have to change. Values are going to have to come down. If the Feds do what they promised they said they were going to do, which is to raise the rates from March on end 3 times, and assuming that they're very much conservative, which means every raise is going to be about a quarter point. If they do this, it means that we're going to have about 0.75 raise. That's not going to do anything where the rates are. That's not going to help the bond market. It's not going to in any way help us. But here's what I can guarantee you they're going to do. They're not going to do 3 raises. They're not. They're going to raise the first time. We're going to have massive capitulation in the stock market, in the crypto. Even at that point, probably real estate is going to be affected to a great degree. I think I'm already seeing the effect of it. With the second raise of rate, they're going to back out. They've done it every time. We're terrible in playing poker. We have handed our rear ends to other countries, except for when we finally had to deal with Ronald Reagan. He's the only one that actually was able to go to bat and beat the Russians at their own game. And we, unfortunately, at this time, by saying how many times we're going to hike it, we're in effect have put ourselves in a corner. And we have no other choice. We have no way out of this. It's not a popular decision, and I don't see the light at the end of the tunnel. This is one of those times that I am more uncomfortable with what is happening than anything else as far as where the market is heading. I don't think that there's a crash. I don't think that the crash, sorry about that, guys. I got to get rid of this call because they're not stopping. I don't think this crash is ending anytime soon. I don't think that anybody can predict that this is going to be a slow this or that. I don't believe that they allow a crash during Christmas. Effectively, since I know it from the inception, every Christmas, the markets have gone up. I don't see how this could be any different. Fourth quarter earnings are coming out soon. Freddie Mac just released the numbers, and they think that the real estate market is going to maintain its volume of sale. And why values are going to stay as high as they are is because there's not that many people that are selling it. Now, yeah, and they're right about it. They're saying that there's not enough inventory. As investors, and many of you are, we are seeing a different thing. We're dealing with off-market deals that are constantly coming out. But the problem that I see with majority of the off-market deals are the sellers do not want to sell below market. I'm looking at a large number of units that are pre-constructions that are saying that we're going to have a cap of 3.5 to 4.5% in Texas. In Texas, 3.5 to 4%. I want you to think about it. These are Orange County, Southern California caps. Who is going to buy the properties there? What investor in the right mind is going to now take their money from the low interest rate that they're getting and go and buy an asset in Texas? Is 4% cap going to work in Texas? And I have to think about this because I think this applies to all of us. I think this is a 50-50 proposition. Primarily, majority of the developers that are buying these investment land and trying to build in Texas, and I'm not talking about pre-existing, I'm talking about the ones that are building. They're mostly West Coast investors. They're coming from California, and they're very smart. Two of the big guys in BlackRock have decided to go to Florida and Texas, and they're looking at large parcels of land. And I know them personally, and they're going to buy. They have more money than God. And what does that tell you as someone who's going to sit there and try to buy properties? They're promising a 3.5 to 4.5% cap to investors. Safe. But here's what they're doing. They're actually guaranteeing the cap. Who guarantees a cap? You say. Who guarantees a cap in an investment that can actually go sideways or down? After all, a property is not U.S. Treasury bond. A property is not a treasury that you're guaranteed by the government of the United States to get whatever mediocre interest rate that you get. They have a look at the migration pattern for the states like Texas and Florida. Effectively, they're spending on the average, and when I say they, the team is approximately 127 full-time paid people that deal strictly with demographic studies and statistical analysis. They are actually looking at these numbers on a constant basis, and they're saying we can guarantee 4% to the investors. Where are we going to make our money? Upside. The equity. They believe that the property values in those states, and we're talking about the well-run states, the states that are run by good governors, Texas, Florida. Of course, we're looking at states like Tennessee. The migration pattern is going to show that the property values are going to go higher and higher, hence the fact that this is going to be valuable for you guys as investors. Should you effectively and aggressively buy? Yes, I think you should, but the problem is who you should buy from. If you have the dough and can actually purchase a parcel of land and can delay immediate gratification and go through the hell that is to be able to get the architect to look at the plans and do what you need to do, I believe that you can pretty much corner the market, making on the average, and I really mean that on the average, as someone who does the building, you're looking at from beginning to the end about 330% return on your money. That's going to be based on the numbers that I see. I've looked at everything. I've looked at parts. I've looked at the architectural cost. I've looked at what the cost of construction is going to be. They're waiting, and actually they're bidding. The bid part of the commodity market by the builders on things like steel and lumber, they're no longer shorting these. And I believe that this is the turnaround in actually bringing the values lower, the prices of these commodities lower, so that the builders can go to town. But builders are not buying in places like California. They're not going to. Don't get me wrong. There's always going to be somebody that's going to build something in Southern California because there's going to be somebody that is very wealthy. But the majority of the people are moving out of California. The immediate move-in is Las Vegas. It's not keeping them satisfied. I'm looking at the migration pattern out of Las Vegas, and people are moving out of Las Vegas to Florida. I'm dealing with people that are saying, we want to sell our home right now because we just don't like how Vegas runs things. We don't like the governor, and we want to go to Florida. So this is sort of something that is constantly happening. And I think that as an investor, as long as you can sort of buy yourself a little bit of time and be able to do proper due diligence on whatever property it is that you're investing in, I think you could come out ahead. You're not going to win them all. I think that you should do what my teacher teaches me. You should get as many deals as you can, put as many offers as you can on a daily basis, and hope to close maybe 1 to 2 deals per week. I really think that's going to be a bit of a crapshoot. So the more offers you put in, the more successful you're going to be able to close it. But I want to make sure we're clear about this thing. Fair market value has been overworked by everybody. The market value of what I see versus what the seller sees versus what you really want to buy are two different things, right? So the fair market value of a home based on comps, as I see right now, let's say in Las Vegas, we were just going over, one of the people that works with me went to Las Vegas to look at a property. The person that's selling this particular property must move to Florida. That person made a very large amount of money by selling it at whatever number that she sells it at. She had a very high offer and she didn't take it. And I believe she made a huge mistake because now things have turned around. Nobody is putting that offer in. All the offers that she has right now are literally, based on what I see, 15% below what she has in mind. So 15% decline in the market. Market is spoken. Agents cannot find the number that she's looking for. She thinks that this is still going to continue. She thinks that this value is going to go up. I can tell you this right now. All investors know when everyday people start saying it's going to go to the moon, it's time for you to know that the top of the market has been hit. I hope that I had better news for you. And I think this is great news for anyone that's out there anyways. Don't get too greedy. If you're selling your property and if you have a lot of equity, I'm going to tell you what you should do. Look at the market value, cut your value by 5%, do what everybody in California does. Go through a bidding. Go 10% below and see if people are crazy over your property. If you go 10% below and you get an offer instantly, do not regret making your 100% equity. Some of you are making $100,000, $200,000. Majority of the Las Vegas sellers, in the last 16 months, you've doubled the value of your home. 16 months, doubled it. And now you think that's norm. It isn't. You're not going to have your property double every year. You bought your property for $150,000, it's worth $300,000. You bought your property for $120,000, it's worth $280,000. If they offer you $260,000, sell it. Don't get too greedy. I wanted to go over these things because I think this is important right now. And there's another question I want to cover in the next video, and it's going to be about a way of doing business when the markets are this way, scary, and you want to protect yourself. I'm Kevin. That's for now.